Hello traders, the title of the video is how to identify the first Elliott wave precisely. Alright, so the most important wave is the first Elliott wave. Why? Because it's the signature of the first buyers in an uptrend. It is also the signature of the first sellers in a downtrend. So it is very important for us to identify precisely the first wave, whether we are counting a wave on the lower degree or the higher degree. All right, very, very important. So in order to identify the first wave precisely, we follow what we call the wave count guidelines. So if you do not know, you need to go to www.24ElliottWaves YouTube channel, watch the video on that web page, wave count guidelines, so you may understand everything. Recently, I have recorded another video when I was talking about the irregular first Elliott wave. That irregular first Elliott wave is not part of our wave count guidelines. For the first time, I share with traders how to identify the irregular first wave. So quickly to refresh the memory of traders that are very new to us, if you have a trending first, bullish trending first, and a price corrected itself and go below the starting point of the prior trend, the level that we must watch is the 138.2% Fibonacci extension of the prior trend reverse, because we're going to apply the Fibonacci extension upside down, reverse, the 138.2% Fibonacci extension reverse of this trending first. So if you apply your Fibonacci extension in a normal way, just turn it upside down and highlight the 138.2% Fibonacci extension level of the prior trend. And very often, the irregular first wave will start from that point on. I'm not saying that that is the case all the time. I'm not saying that if the financial instrument comes to this point, we will have definitely a new trend. A correction can become a complex correction if the market is not ready for a new trend. All right, that's it. But going back to the main topic today, how to identify the first Elliott wave precisely. All right, we are looking at advanced macro devices, AMD. Unless you are living on a different planet, you don't know what is AMD. If you are using computers, probably you are using AMD processors. All right, so the AMD and Nvidia, do you know about Nvidia? Another computer chip producer. All right, AMD, Nvidia, those are competitors. So recently, a few months ago, I have recorded a video about Nvidia when I was talking about the bullish stock that defies gravity, because it went up big time. You want to see it? Okay, I'll show you verified. Nvidia stock was NVDA was very bullish this year. So here it is. See how it ran fast. Will you be happy as an Elliott wave trader to catch the third and the fifth wave of this stock? And here it is, very bullish. It went vertical. Well, if you look at it, try to admire that for a while. It's good to admire things in life. Look at that. Talk and the Siva 2016, 2017. Look at higher degree wave count. We are now. See? So that's what I'm talking about. So this is one of the peers of AMD. This is one of the competitors of AMD, Nvidia stock. Let's go back to AMD stock. Now, what you need to understand in the financial markets is that sometime in one particular sector, one stock may start a bullish trend. Like Nvidia has started a bullish trend. And people will be wondering, oh, what's happening to other competitors? What usually happens, because the other stock was very bullish, people make a lot of money. Now that stock reaches maybe the fifth wave, or it's about to begin a correction, or it's about to pull back a bit to form the fourth wave before the fifth wave. Because those bullish traders are looking more okay, excitement. So they will look for the competitors and they will try to find a good excuse why they should buy that stock also to create a new trend because they have made a lot of money. For instance, for Nvidia stock, so they will come back to AMD, try to buy. So they will look for all kind of excuses, try to buy that stock. So, but for us, an early always trader, we want to identify if that trend in first will start or will continue. It is very important for us to identify precisely the first wave. Once we identify that first wave, we will now, it's very important for us to check the fundamental because the trend will not take place if the fundamentals are not solid. You remember? The fundamental traders, the institutional investors, the bank, the hedge fund create the trend. It's not the retail traders, you making your little trade ups and down that create the trend. You want to buy, you want to have long-term market participants create the trend. And as long as those long-term market participants stay put, all right, they will attract medium-term investors and also short-term trend investors. But as long as those long-term investors stay put, the trend will stay put. All right, until those long-term investors start coming out at the end of the trend, which means at the end of the fifth wave, creating a correction. So the correction will only happen when those long-term investors think that the market is overbought and they start coming out what we call distribution taking place. So like now people talking about S&P 500 being overbought, Nasdaq 100 being overbought and so on. If the long-term investors do not bother to come out, the trend will stay put. So ordinary trader will be trying all kind of technical excuses to sell and the price will not budge. All right, so it's very important for us to identify the first wave. So what is happening here? The reason why now I'm analyzing AMD is because the competitor, one of the peers of AMD, Nvidia, has been totally bullish, has been going up, okay, like a bullish cow. All right. Now we want to see, are we now, where are we when we are talking about the AMD? And it's so important for that exercise that we get the first wave precisely. No more excuse. All right. So let's begin now. You can see that it was quite volatile. You see all this shadow here, long, all these pins piercing through key level. This one too long. What can you do with that? Another one, it's quite volatile. See all this shadow. So one of the characteristics of this stock is that it's quite volatile. So when you are trading stock, looking at the past, one thing that will go through your mind quickly is that it can be volatile. So even now, as we are talking about identifying the first way precisely, we need to understand that this stock can be volatile. So it can be, you can call something first wave, and the next day, or a few months later, or 3 months or 1 year later, we wonder why in the name of God we call that first wave. And looking at the characteristic of AMD is a volatile financial stock. A bit of speculation taking place here. Okay, identifying the first way precisely. All right, so here we are. So I'm going to go back. I'm on the yearly chart now. I'll go back to the monthly chart where I'm more comfortable to count wave. Here we are. Okay, one thing for sure, we use reference point is that in 2000 we have what we call a technology bubble because it's a technology stock. AMD is a technology stock. In 2000, if you are analyzing counting wave on any stock that belongs to the technology sector, you need to highlight the level, the year 2000. Most of the stock did crash down in 2000. AMD, there was no exception here. Okay, now 1, 2, 3, 4, 5. 1, 2, 3, and so on. So here it is, 2000, reference point 2000. If you are dealing with a technology stock, don't miss that reference point. Put it there. There was a bubble and then a crash. So it's here. So there was a trending first for this stock from 1998. If you call this first wave, second wave, third wave, fifth wave is hiding somewhere here because of the crash. So the third wave definitely in this session. Fifth wave is somewhere here. You see the shadow here. There's a fifth wave somewhere there. and then the crash that is following in 1, 2, 3. So this is what we are talking about. 1, 2, 3. Are you with me? Let me talk about this because I want to dwell on it for a while. I talked about it last time. So the bigger structure is 1, 2, 3, but the last component of the 1, 2, 3 is also subdivided into 3. This is a reversal pattern. 1, 2, 3, but the last component of the 1, 2, 3 is also subdivided into 1, 2, 3. So if you don't know about this pattern, it means that probably you have been watching only part of our video, or you never reach the end of the video, or you hate my accent. Why? Alright, here it is. It's the last components of the 3. This is a reversal point right here. So we can say for AMD, there was a trending fell from 1998 to 2000, and then a correction from 2000 to 2003. In 2003, we have the commodity, boom, commodity trending period, and the AMD start going up from here. But as you can see, for us as an Elliott wave trader, as long as the new trend did not go above the 138.2% Fibonacci extension level of the prior trend, we will not call this as a trend. A lot of ordinary traders will call this as a trend, but if you are a subscriber to 24 Elliott Wave YouTube channel, you shouldn't call this a trending phase. It's not a trending phase. You may label it X or something else. It's not a trending phase as such because it did not go above the high of the prior trend, unless we can talk about a higher degree or what should I say, a super higher degree. We've come reaching the fifth wave and nothing should go up more. So this is not a trending phase. Alright. Okay, so you may say, Joe, this is a classic flat correction, 1, 2, 3, with the last component subdivided into 3, and another 1, 2, 3, with the last component also subdivided into 3, 1, 2, 3, and then it crashed down 1, 2, 3, 4, 5. This is a flat correction, bringing the price below the starting point of the trend. The trend has started here, and all this section here is a correction. So the correction that has started in 2000, alright, somewhere in 2000, has ended in 2009. It's a long time for a correction. Can you see that? This is not trending phase, okay? Don't forget fool with that. Okay, so now an Elliott wave cycle has ended here. Okay, hold on please. An Elliott wave cycle has ended here. You see now, here, right here. But that correction is below the starting point of the trending phase. So this is the starting point. Let's call it that into red. So when I talk about, I call it into orange. That's the starting point of the trending phase. But the correction went below the starting point. So when we are talking about identifying the first wave precisely, the only first wave that we can count below the starting point of a prior trend is which first wave? Is the what? The irregular first wave. So we will apply the Elliott wave extension, reverse, upside, or Elliott wave, or we will apply Fibonacci extension, reverse, or Fibonacci extension upside down to the trending phase. So, alright, and we will highlight below the 138.2% Fibonacci extension, reverse or upside down of that trending phase. It's somewhere below here. We can see on my chart. Even if you go to the yearly chart, you will see somewhere below there. So here, as we see it come near here, starting in direction, at that point in time, we will say, all right, Joe, this is the first wave, and this is irregular first wave. And some traders may say subdivided into 5. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Do you agree? So we will say, at that point in time, we will say, okay, probably I'm choosing my word carefully. We say probably this is the first wave, and it is an irregular first wave because it does not adhere to our wave count guidelines at the 2-4 Elliott waves. So we say, all right, let's see. If the fundamentals are not solid, if the market environment is not viable, there won't be any trend. That was the case here. So market environment was good, but fundamental was not helping AMD. So the S&P 500 did start a bullish trend in 2009, but the stock itself let itself down because it was not making money. It's not gaining more market share, and Nvidia was dominating the market. Intel was dominating the market. Its peers were dominating the market, and people were wondering what's wrong with AMD. And that trend, in fact, that first area wave has been cancelled. How do I know? Because according to the area wave rules, the second wave should not come to the beginning of the first wave. So you may say, Joe, it did not come to the beginning. Okay, hold on, please. Let's see. Ha 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 ha. It came to the beginning, yes or no? See the horizontal line here? But when you look at it on the chart, it looks like it did not, but it did. You see, it came to the beginning. So following our guidelines, we will say it has cancelled it. But as I mentioned it to you in earlier videos, there is a group of traders out there that think that if it does not go below the low of the first wave, that second wave is still valid. So for those traders, they will say first wave, second wave, and they will say we are now in a third wave. And I will disagree with that. And I don't like that because you can see the price bounce from here and then again pull back below that low of the first wave. So if it did not cancel it here, it did cancel it now here. All right. So this is the question. Personally, I would discount that first wave and restart counting my wave. So remember what we said before. If the second wave has canceled the first wave, we will restart counting the wave. We'll start looking for a new first wave, a new second wave, and so on and so on. But if the fourth wave is overlapping the first wave, we will not restart counting the wave. All we will look for is for a new fourth wave. In the case that the fourth wave is overlapping the first wave, we will only look for a new first wave. So our first, second, and third wave will remain intact. All we will be looking for is for a new fourth wave. All right. So now that our first wave at this junction has been cancelled, following our guidelines, what can we call now the first wave? Is this one here. It's still an irregular first wave, all right, because it goes below the low of the prior trend. And here it is. This is our first wave, and it has the characteristic of a first wave. This is one thing. So talking about how to identify, okay, the first wave precisely, you want to know, is it a normal first wave? Okay. Is it an irregular first wave? Okay. Does it have, okay, the characteristic of the first wave? All right. What are the characteristics of a first wave? The first wave should break resistance on the left-hand side, should break above the consolidations. All right. So this one, as you can see, it breaks above the resistance on the left-hand side. It's a typical irregular first wave. As I explained to traders before, very often the irregular first wave is likely to be extended. Most irregular first waves are extended first wave. I'm not saying that all irregular first wave are extended first wave, but whenever you call something irregular first wave, or in fact when you call anything first wave, you should expect an Elliott wave extension. Expectation does not mean it's guaranteed that it will happen, but there is a possibility that it may happen. But when we call something irregular first wave, we need to be ready for an extension if there will be an extension. So now that we see this, we record this irregular first wave with possibility that that first wave will be extended. So do you think that this discussion will help you to identify the first wave? So following our guideline, we use different methods, different tactics to identify the first wave. Is that we have, okay, a trending phase and then a correction. Elliott wave cycle has ended. Possibly that a new trend may begin, provided the market environment is solid, is viable, and the stock itself has a strong fundamentals. But sometimes things can become a bit more complex for the first wave, which means you see a trending phase and then a correction, either a zigzag or a flat correction. You are expecting a new trend, but the market is not ready, or the stock itself is not ready. Then you end up having what we call a complex correction or a combination of corrections. So the correction is prolonged, as you can see here. So here, if you were here, you see trending phase, 1, 2, 3. See, or end of correction, a trending phase is about to begin here. You see first wave, second wave. Now here it is, third wave, fourth wave, and a fifth wave. It is an Elliott wave violation because your third wave is the shortest impulse wave. Not only that, the new trending phase is still below the high of the prior trend and also below the 138.2% Fibonacci extension level of the prior trend. Following our guideline, this is not a trending phase. It's part of a correction. It can be a next wave. Alright? Or we use what we call the inverted head and shoulder chart pattern. So there was a trending first, I pull back, then we see a clear cut inverted head and shoulder chart pattern. So you say to me, Joe, there was one here. It's an inverted head and shoulder chart pattern, yes or no? So you see first wave, second wave, third wave. Here it is. Okay? Look at that. What kind of fourth wave is this? Constantly, so you know that this is a violation of Elliott wave principle. Again, you see? What is an irregular first wave? It's the first wave that starts below the low of the prior trend, typically at 138.2% Fibonacci extension, reverse, or upside down of the prior trend. This is one here. The second wave should not cancel the first wave. If the second wave cancels the first wave, we must restart looking for a new first wave. An irregular first wave is likely to be extended. Doesn't mean that it's guaranteed that it will be extended, but in comparison to a normal first wave, the irregular first wave has more chance to be extended than the normal first wave. What is the difference between the irregular first wave and the normal first wave? The normal first wave, all right, does not start below the low of the prior trend, but the irregular first wave very often will start at 138.2%, not always, usually at 138.2% Fibonacci extension, reverse of the prior trend. That's where the origin of the irregular first wave is likely to be. All right, so for AMD stock, though Nvidia, it appears, has already completed, okay, it's now in the third Elliott wave, gigantic third wave, all right, we will say at this junction, we can call this one first wave. If it is extended, this will become the first manual wave of the first wave. Are we going to have a third Elliott wave? All right. So when can we talk about third wave? So you say first wave, second wave is likely to have a third wave because Nvidia has been bullish. There's a high chance this one will also go up. I'll buy. When is the best time to buy? You want to look. You are trading first the markets before Nvidia, before AMD, before the individual financial instrument. So whenever you want to catch the third Elliott wave, check the S&P 500. Some stock, what we call defensive stock, can back trend the market. So the market may be going down, those defensive stock will go up. What usually happens is that when the stock market is going down, the people will start buying those defensive stock to protect their portfolio. But be careful, my friend. Be careful. Be careful. I don't want to talk about that in this tutorial. All right. So I will stop here today. But if you have more questions, or put in the comment section, that will help us to expand on this subject about how to identify the first area wave precisely. So we welcome your comment, your question. What do you want us to talk about? So something specific related to this subject about identifying, okay, the first area wave precisely. If you find this video truly useful, let us know by giving us the thumbs up. If you think that this is another ridiculous recording, please mark it down, alright? If you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about how to identify the first area wave precisely.